following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and this is December the 21st, almost a wrap-up time for 2016. Whew, quick year. And my pleasure to be here, noon, 11 o'clock till noon, and let's take your calls at 877-927-6648. The E-minis are up 15, the S&P's up 10, at 2016, that's the S&P. Dow's up 74 at 17,203. Comp index is up 28 at 49.51. Gold is up 13. Nice move in gold, 1,078. I'll show the chart in a short while. Silver's up 17 cents at 14.27. High-grade copper's back at 213. Well, that's quite good. Crude oil is down at 34.21, down 52. That's not good. And bonds are up 30 seconds at 156 and 15 30 seconds. Let me just check in. The dollar is down 28 cents. Let's just do a couple of things here. The E-mini shows you something very interesting. There was a series, I'll show this a little clearer in a short while. I just want to do this quickly. See these declining highs that were made back in July into August, and then very sharp decline? Well, there was, in fact, a little channel that was formed right there, new parallel right there. And when that was pierced on the 20th of August, remember going to the 24th low, 2030, around about 2031 was the key support, and it smashed through it. What we've just done is we've mirrored this declining series of highs from the 2102.75 level with the Chapman wave 2-bar reversal the following session at 2102.50. And we've traded between the 2100 area and 1991 with slightly lower highs and slightly lower lows going to 1983. And then there was that rally going into the high of Thursday with a very sharp reversal intraday. And then under the 9-period moving average, there was a smash on Friday. Now, what's interesting about the futures is the futures didn't reflect what the Dow showed, the 200, I can't remember, 50-something point decline on Thursday, but the 300, very big decline, over 300-point decline on Friday, which I think was exacerbated by a number of factors, especially with options expiration. But that's really not the issue. It doesn't matter what it is. Look at the trend line support that needs to hold now in the E-mini. Right there. We did not take out the low on Friday of 1983.25. We went all the way down to 1991 round number low. Rally, a very sharp rally this morning, overnight into early this morning, and now we're sort of failing. We're up 14 points. Dow's only up 70. To me, this is, when I look at a situation like this, what I love to see is that there's a give back of the excess of the accelerated gain or decline in late afternoon. And that often happens. And then what you do is, if there was a move, say at 3 o'clock, whatever is trading, let's say it's trading at 200, but then there was this accelerated move towards the highs of, say, 205, those 5 points, I always expect that the next day you'll see some give back of at least that extra gain. On the downside, what we saw in the Dow was the move from the 13,000 somewhere, let me go to the E-mini since we're talking about that. That move that was basically at the 2,000 level, once we started to break that, there was that accelerated move down to 1991. Well, we've come back quite a bit, but that's not good enough for me. I want to see some leadership, and I'm looking at leadership starting to fail in key areas. I'm also starting to see sectors that are one by one seeing their stocks decline. So this is a very important moment. What I was anticipating, which didn't come about, was that the market was it would struggle, but it would make higher highs, and that would go into this week, and maybe it didn't have to go into next week, but it should go into this week, and instead we plunged to the downside. Haven't broken key support, but I do not like the action of this morning with a very sharp move to the upside. I would have loved to have seen a sudden pull, a rally overnight, then the E-minis open maybe 7 or 8 points higher, with the Dow maybe 55 to 65 points higher, S&P maybe 7.5, 9, maybe 9 points, and then suddenly a swoop to the downside, or I should say a swoon to the downside, and then you get that extra move to the upside. To me, that would be really constructive. This is deconstructive. I don't like it. I would prefer that we did the other way around. Okay, well, I'm not the market. I'm just looking at the market. So let's look at some quick intraday. I know I get emails saying, could you just show us the 10-minute chart that you're doing without any technicals? Well, here's this trend line. Let me make it something important here. Let me make it green, because it should be a springboard, and instead it's not acting as a springboard. And then what I would normally do underneath it is I would draw another parallel, and I'd take that parallel to some other important area right there, move it up, and I'd say, okay, this is going to be very important. And to the emails I had asking where could I buy the E-minis, I said, you've got to wait. You've got to see how it tests the 206, 204 area. And we're right at 2004, 2006, 2004. So this I'm going to make red, because if we go underneath it, all of a sudden you're looking at this low that was made at 10 minutes past 3 this morning. And that low is at 199.75. So this is going to be a really important moment. Let's look at the VIX and this 10-minute chart just to see if we can get any clues as to where the support will be. Yeah, the VIX is down $1.13 at 1957. I'd say to subscribers, we want to see the VIX in the 18s and the Dow up about 110, 115. That's going to be very important. So now, talking about very important, let me just go to this, because I'm liable to get carried away with all the other stuff and not mention a very important aspect of what we're doing at TFNN. Look at this front page right here. Salvation Army Tiger Dollar holiday sale ends today. Purchase any amount of Tiger Dollars during the Salvation Army holiday promotion, wonderful promotion, and receive a 25% bonus, and up to 10% of your purchase will be donated in your name to the Salvation Army, a better cause we couldn't even think of. So please go to the front page, check it out. Tiger Dollar holiday special, last chance. Every purchase leads to a donation to the Salvation Army. Gosh, just couldn't think of a better way of spending dollars. A win-win situation all around. Now let's just go to something that I consider to be as important as anything else. Within the context of the market, we need to look at, and this I showed my subscribers to my opening call over the weekend, what I had said was that the volatility index had run up, but while it had run up, there are specific levels, and I'm making it really important. In the 20s, it just denotes selling, and in the going down to the 18s or lower, it's buying. Just keep it as clear as possible. That's at least in my work. All right. So now I'm going to skip that, and I want to do something else. Within the context of bonds, you've made a potential peak F in the Chapman wave in the daily. The weekly chart is scurrying, it's trying its very best to get to this very strong downtrend resistance area, which will be in the 158.5 area. Let me move the 120-minute chart away. It's made a peak A, B, C, D, retest. Double top so far at D. A, B, C, D, up double top at D. So we're going to watch that closely. But this is already what I wanted to show you. In the larger context, you remember I was talking about this and I said, I'm not sure whether the Fed wants to do very much other than this one bump to the upside, and I'm not sure what they'd be looking at. But if we're looking at this really long-term trend up channel in bonds, let me move this because it's always been smooth. There it is. We are sitting real close to the key Chapman wave inside track. That means that this area here is going to be absolutely imperative if bonds start to decline for it to hold. Because if bonds close under 143, they're trading at 156.5, 43, that's a long way off, but you know how quickly bonds can move. So if they start to trade there at any point in the next 6 weeks, the yields are going to go much higher. But wait a minute, let's look at the yield. TNX, wait, TNX is a 10-year. Am I forgetting now what it is? Let me just get out of this. Let me go to the closed workspace. Yes to all. Whoops, that was a mistake. Right there. Okay, and we're going to add this right here. A long-term chart. And that long-term chart is saying, here it comes. Oh, it's taking a little longer than usual. Usually it's instantaneous. Uh-oh. Oh, that's because it was saving at the same time. There it is. Ah, wrong one. Didn't want that one. I picked up the wrong chart. Close the workspace. Yes to all. And we want this one right here. Recent workspaces. There it is. Okay. And what we're going to see in this particular chart is my triple yield chart. And look at the way bonds have made an arch formation, bond yields. An arch formation in the 30-year, the white one, the 30-year TYX. In the TNX, the 10-year T-note. And in the FVX, the 5-year note yields. So these are all the yields. So isn't this interesting? That we had that resistance line that I pointed out recently. That was a downtrend line. I spoke about this horizontal line that I said we've been at so many times before. Nothing really much is happening in bonds. I don't expect things to happen in bonds. I think the Japanization of our bond yields should continue a little longer. And I'm wrong if bond yields suddenly, the 30-year goes above 31.40. But absolutely it doesn't even have to close, but any spike above 32.55, the high that was made the week of June, this is a weekly chart, June the 25th, I'm looking at bonds going much lower. That's why I wanted to show that relationship. Now we've got something very interesting that's going on. Let me move this chart away, move it down, and you will see here, this is the iShares Global Timber and Forestry ETF. See the resistance at that peak C, which is becoming a peak C minus, and it's failing and coming back at 47.25 with a low of 44.10 and a high just recently 4 weeks ago of 52.47. Well, this is saying that the whole area of housing is starting to weaken, and this is the HGX, the Philadelphia Housing Sector Index, which made that double top failure pattern, right shoulder failure pattern in the Chapman wave. I'm looking at this as becoming quite vulnerable. So there's a lot going on, and then I want you to show the South African chart. All right, I'll be back straight after this break.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I'm doing a little work right now. During the break, I did a chart that I had done a long time ago, but I'm redoing it on a different platform. And this is the South African right there. So this is the South African Dow Jones South African Index, and they do have. I had at one point a lot of knowledge about what was inside. Now I just can't remember exactly, but I know that there are not as many gold stocks as you would think, but there are some gold stocks. However, there are some in the area of the precious metals, etc. There are some companies, some pretty big companies actually. So this is what I'm looking at here. There's a chance that this is a G in the monthly chart, unless it's recycled. And if it's recycled, gosh, that's like an A. So I don't want to put. I'm calling it a G for now. It says this is the chance that the South African stock index has a chance to rally in the weekly chart. The monthly chart has got a candle that is. So far, it's potentially a Chapman Wave Roman candle, and it's very positive at the lows, if it is a low. If in January and February there are closes above, this is the Dow Jones South African Stock Index, so it matches very similarly to the actual index. I just don't have that index anymore. I used to have it, but it has different numbers because they're using a different composite. But meantime, A close above 317.08 in January without a retest of the body of this. That's the close. Well, we don't know what the close is. So far, the close is around about 283. But if there's a close closer to 278, which is the 200-period exponential moving average, that's a big negative. But if there's a close above that level that I was speaking of right just a moment ago, 317.08 in January, and another close above it, without touching the 200-period moving average, suddenly we're looking at gold having a way better stance and a way better configuration than it's had in a long, long time. And then this very ugly candle of 3 weeks ago, remember when when gold just took a plunge, that would say that there's a chance that you could, in fact, rally to the 300 to 299. 299 is the 9-period exponential moving average. Well, that doesn't make sense, does it? 317. Obviously, if you're going to go above 317, you'll be above 299. That'll be quite incredible because that would turn the 299 area where we broke down from. Oh, this is interesting. Remember the left side, right side price time match that I always look at? Well, that goes back to the low that was made back in June of 2013 at 305.45. My rule of thumb in this big in any arch formation is that if you take out the left side low, then you have only that's where it should have gone to. Then you have only that bar that takes out the low, or one more to close above that left side low of importance. And in this case, it's the left side low of 305.45. You would think it would be the low right here of 302.37, which was made just the week of the 2nd of October. No, I want to go to the original one because that's where the timing and the match all came out to. So that says that we've already extended, we've taken it out once and closed below it once. And then for 3 weeks, we've been under it. Well, 2 weeks, this is the 3rd week. After that, so it's 4 weeks altogether. That rule of thumb now is out the window. So that means that what you really have to be looking at is something has to trigger it. Trigger a rally. Now, I'm going to put this together with gold because I think it's very important. Gold is acting quite well. It actually acted quite well for 2 days. This is the 3rd day. So now let's look at the gold itself. Gold is trading at 1,078. There's a potential H pattern successful test of the low. Only reason why I didn't go back into our gold trade today was that the dollar was holding quite nicely. So this is the gold, and if gold closes, now it can't just hit it and then pull back. If it closes above 1088.33, that was the high that was made in the continuous contract on the 4th of December, all of a sudden you're looking at the left side high of the 16th of November of 1097.10 being some kind of a target. All right? So this is a little early in the whole business of trying to find some formula. The MACD is good. Stochastic's way better than it was at the previous low of the 3rd of December with a low of 1045. So far there are a bunch of technicals that are acting much better. What I wasn't happy with over the weekend when I was looking at the gold weekly chart is that the stochastic didn't make a nice V-shaped turnaround. The on-balance volume tried and then it failed, and the MACD is still quite negative. So this says to me that the 1086 9-period exponential moving average in the weekly chart is could be very strong resistance. A close above 1090 to 1100, that resistance area, a close above it will be the first time that we're looking at gold attempting to tackle the 9-period exponential moving average since it broke down back on the week of November the 6th. So that's interesting.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Yep, this is Ugly Action. Dow's down 2. S&P's up only 1. Lousy action. Now, this is a good price I mentioned in the Den price line. Made a peak G-top in the daily at 1476.42 on the 5th of November. Had a sharp down move to the 24th of November to 1212, round number low. And then it goes peak A, B, C, D with a silent doji. And the 17th of December, at 1341.99, it starts on its down move, and it just broke that 9-period. We couldn't hold the 9-period moving average resistance and pierce it. It turned down. The weekly chart is at peak D with a gap down, and this is that right shoulder failure pattern. Now, this is going to be a very interesting thing because Priceline has been a leader in the general market, online services, hotels, rentals, a whole bunch, and it made a high of 1398.76. Back in 2000, was that March of 2014 at 1378.96, pulls back to the low of January of this year at 990, 0.69, runs up to leg D, and now it's a very quick ABCD, and now it's pulling back. This doesn't look like in December it's going to make a new high. That's going to make it a peak D with the technicals fading in the monthly and the weekly and the daily. So if price line, a leader to the upside, is starting to make some kind of a top, we have to be looking at this and say, hey, wait a minute, let's look at the XAL, because this is, in fact, this is the ARCA Airline Index. And for anybody who's flown, you know that they just absolutely trying their best to keep planes as full as possible. So they change the scheduling, and so you go on full planes. You can't, I mean, the other day the overhead, you couldn't even get an overhead. Even if you had carry-on, you had to send it down to the, you had to pick it up because it went to the hold. So this, they're pushing like crazy, and yet it's pretty much, I wouldn't say it's well off the highs that were made back in January. I think it was this year. January, was it? January? Yeah, January, 108.16, trading at 89.11 right now, having hit in August 76.99. So it's 13 points up, but it's 108. So that's 20. Yeah, so it's 20 points down, not acting very well, starting to roll over in the weekly. So I have to take this very seriously. I still think that there's enough residual buying that you're going to be seeing flurries of activity. If it's just a holding pattern, there was a spike, a rogue wave spike on the 7th of December to 94.87 in the daily chart. Let's see, at 94.87. This is very interesting because I have a stock that we have in the portfolio of a particular company that I think has, at least for a long time, maybe two decades, has been pretty good at telling me when to start being a little careful because of not necessarily a recession, that comes a little later, but when it starts to sales start to slow down, it's just a real good indication to keep an eye on it. We're actually short this particular stock as well, but it's telling me that and this would be typical of what happens when the Fed does something. It's done after they've studied all the technicals and all the data and the numbers, etc. And it very often happens. Historically, over the decades, I've always said, as soon as any administration says recession over, you've got to be real careful about looking at a recession just about to start. And as soon as they start talking about a recession, it's usually way into the recession itself. So this is going to be very important. Where are we? And if I look at, say, Apple, there was this great program last night on Apple. I didn't see all of it. I got enough of it to say, this is a confirmation of what I'd spoken about some time ago, that the edifice that Apple is building is an incredible building. There's a piece of glass, as I recall hearing, I think it was made in Germany, and it's impossible for it to be one piece of glass, but the glass wraps around the entire huge building in a circle. And they said it's the longest piece of glass ever made. I don't know, but as far as I'm concerned, look at the Apple chart. Peak F in the monthly, 134.54. Back in March, I think it was April, at 134.54. Plummets down to 92, round number, in August. Rallies up to 125, was it? 123.82. And today it's trading at 105.76, even after that great report. Monthly it's a hat trick top as far as I'm concerned. The weekly has gone to made a peak E top, and there's that pattern that I'm seeing in a number of charts now. I got to now watch this real closely. It's this cup formation that tries to make a double top, and it's almost like a head and shoulders. It's a really complex head and shoulders pattern. You can identify it if you know the pattern very well, but it says now you're making the arch formation in the weekly chart, and you've got to be real careful because it closed below 103. That whole area between 103 and 100 is going to be sacred, because you crack that on the downside, and you're going to fill in that whole candle, the monthly candle, and the daily made a peak E top in the Chapman wave. What did we look at in the Chapman wave? At least four higher peaks for a buy mode. At which time you've got to start looking out and saying, be careful, because at an E and an F, you can turn down sharply. If the technicals fail, which they did, the recent rally to the double top in the arch formation, taking out the left side low, suggests round number 111 was taken out. That was from the 16th of November, taken out 2 weeks ago. And this is not good action at all. So I'm not sanguine, although we do have long positions. They've been long positions that have been holding very well. Let's go to Ben in Tallahassee. Ben, how are you?
Hey, Basil. Very good. Thanks. Question for you on, and really your perception of over the next couple weeks, obviously with the holiday season, do you feel technology has come to the point where, with automatic stops and all that, and maybe automatic buys based on the market levels, that liquidity could still be there? It's just done by computers? Or do you feel when the holidays come up like this over the next 2-week stretch that there really isn't going to be enough to really move the market immensely in one direction or another?
You bring up extremely valid points. One of the reasons why I think that there was that extra move both Thursday and then again on Friday to the downside, there are a number of factors, besides the fact that there are some very weak stocks. I mean, there are some which I just spoke about, key stocks. I mean, in the NASDAQ, I mean, the Index 100 with Priceline and Apple, very important, heavily weighted stocks. But I think you're absolutely correct. So essentially, your question is the light volume with the fact that we've got, there's nothing really that's changed there, but it could be exacerbated on the moves, and that is that the program trading, there was a period, I don't know if you were around trading at that particular time, but there was a period back in the 90s, probably 96 through 99, through the top in 2000, where we would get intraday program, and they would say, oh, program trading, and you would just see it kick in, and you would see the futures down, and then they go down more, and then they go down more, and then bam, there'd be a reversal, and they'd go up, and they'd go up. And it was like mechanical dogs. That's like at the horse races and or at the dog races, and the little rabbit or whatever they're chasing just reverses course, and they all reverse course like, I would say, like sheep, but in this case it was dogs. So you're absolutely right that moves can be exacerbated. But that would have said that this morning, when the Dow ran up to about 118 and then pulled back to about 98, and then suddenly had that move to retest the 118 area, that should probably have triggered some kind of program buying. So, and this is very interesting, because over the weekend I was speaking to someone from a different state who's a broker. And that person was saying that someone in the conversation said, what about gold? And this person said, oh man, every one of my clients is calling and saying we need gold, and this is just a horrible market, and I'm going to crash, etc. And I'm listening to this and I'm saying, I can see that in the market. Now, if you don't mind, I'm going to go, you asked about the S&P. Let me show you something very interesting. The SPY, with all the volatility that we've seen up and down and up and down and up and down, is still trading in the 190s to the 200 area and hasn't broken down. It could still do it. I'm just saying, as we're speaking right now, with all this volatility and all this nervousness, you're not seeing the S&P actually break down. Yes, there is an arch formation. Yes, if it took out the low of 198.90, closed under 198.94 in the next 2 days, the low of the 14th, I'd have to say, now we're starting to see much lower lows and much lower highs. And that would be a significant trend change. We could still see that, but I'm just at the same time impressed that there's been enough buying. And this is really going to your question. There has been enough buying at least to maintain the support levels. Your theory, or at least the premise that you're posing right now, is we'll know if by say Wednesday, instead of this being a fairly quiet week going into the holiday period with a slightly upside bias, we'll know that if one is at 200 right now, the SPY, that's the S&P Depository Receipts trading vehicle for the S&P. We'll know if I'm going to be very strict with this. There's a trend line at 197. It's already 198. I'm going to call it 197.50. If the S&P, if the SPY breaks that level, closes below that level, I think that we're definitely looking at the MACD in the weekly chart about to cross negative, even though we have to wait till Friday, or is it Thursday? Wait a minute, are we trading? Do we have a half? Now I'm lost. Do we have a shortened week this week or next week? I think this week's a regular week, right? I'm not sure. But in this case, we'll have to look at how does the S&P rally and hold. Now, at this point, if you get a rally, it'll be a rally with substance. If you don't, we've got to look very carefully. So I think to bring it up is absolutely correct. It's really a perfect point to bring up at this particular time to say, what if all the program selling kicks in with low volume? Where could it go? And I would say to you, if it does kick in, we start to trade underneath 199 today or tomorrow, it could kick in quite quickly.
Yeah. So you feel, and a lot of it has to do with technology, that if it does break these key levels, that it could still very likely trigger either a sell down or a buy up. Correct?
Yes, but the buy up, I'm still not looking for I haven't been looking for all that much from the all-time high of 213.78. I was really looking for a test of the upper level, and that to me would have signaled how we're going to be able to trade. And then I'm looking for I have been looking for a correction starting a little later on. Maybe I was thinking the last week of the year. That's when it often, if you're going to get some kind of a pullback, that's kind of where it can start, or the very first day of trading in January. If we've preempted that and we've already started the down move, then we've got to be careful. So I'm only looking at a real best case. If everything kicks in and by Thursday, you're looking at the S&P, the SPY, having held beautifully the low of Friday and actually moving above the 203 to 204.5 area. It has to close above that by the latest Thursday. If it can do that, then you're looking at upside potential for the weekly chart to start looking a little bit better and the MACD to deflect higher. And then I'll be looking to see where it starts to fail as we get closer to the top. So it's a funny thing, because my bias is to be looking more towards shorts from this week, but at the same time, I'm saying I would like, the market doesn't have to listen to me, but I would like very much somehow or other to ameliorate some of the selling and to have a little bit further to go on the upside so that I can see some completed moves in some of the weekly charts. If I look at, say, even if you look at the down.
What really prompted this was I was watching the market this morning, and I mean, to be up 130, 140 points and then drop so quickly in an hour and a half, I thought this selling would have accelerated by now. And I was thinking maybe it has to do with just the holiday and people are doing their whole holiday vacation.
So let me go to that point now, because what we've done in the Dow Diamonds, the low on Friday was 170.89. The low today is 170.91. And I'm going to go based on this at the daily chart. Although the stochastic is looking not bad at 39%, I mean, it's not good. It's just that it's way off the lows. Actually, I don't know. Do you have time to hold on or not?
Well, I'll have to let you go, but I'll certainly listen tonight.
Okay, because I just wanted to talk about the fact that stochastics rallied somewhat. It gives room on the downside. At the moment, it's a slightly positive divergence, but it does give room. All right, well, thanks, Ben. Right. I'll talk to that issue.
Good. Thanks a lot, Basil.
Okay, we'll be back, folks. Dow's down 5.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. I should mention to subscribers, although I kept looking at it all weekend, I don't know why I forgot to mention it today, because it was happening already. I guess that's why, that the S&P futures were rallying overnight, but you remember on Friday, on Thursday, I got 408, some people had 533 for the short-term trading index high. And then the next day on Friday was 345. So that a cumulative effort there said that there should be, the E-mini futures should be more than 12 points, 10 to 12 points higher overnight, and should lead to some acceleration in the cash indices And then we've got to see what happens. That's exactly what we've seen today. So that's once again proved itself to be very nice as an indicator. That's what I was basing things on this morning. I think I forgot to mention it in my overview. So here's something else. You see those that pink declining series of highs from May into July in the Dow? Well, we're replicating that. So are we here ready for the next bounce? Or are we here with the little bounce almost done and now we start to make lower lows? This is going to be very important in the aspect of the match between one technical left side series of components and on the right. Now, what I wanted to mention also is that you can see in the stochastic earlier this morning, the stochastic had already run up. Let me just do this here. From the 11th of December, where the stochastic was down. I wonder if I can actually read it here. Stochastic was down at 17.41%, the slow, that's the red one. And then it had run all the way to Friday even. It had run up to 42, 42. So this morning, it's another reason why I wanted to talk to Ben about this, who had just asked a very important question. To say, I know it sounds ridiculous that if we go up, it's good. If we go down, it's bad. But this is really obvious that the MACD is deflected lower yet again. That's not a good thing. That's a negative. The stochastic now, as the red line, has a lot of way to go down since it was so much higher. But now look what's happened. The slow is at 16.10. Is that right? No, sorry. The slow is at the fastest 16.10. Slow is at 39. That red line there. So this is a case where it says that 39, and which says that if the price goes much lower, the stochastic has plenty of room to go down to under 20%. I don't want to see that. I want to see the MACD turn around and turn up, start to cross positive. That'll take at least a nice close to down the upside. See, what we saw is exactly the reverse of what I like. I would have liked an opening bounce and then just a bounce, a little bit of a bounce, nothing like we saw, but just like a up 35, 40 points in the Dow, up 6 points in the S&P, and then we take a decline and we go lower. And now would be fresh to start if there was a move to the upside and the Dow was able to get from 17,131 to the 17,000, see, up about 45 points. So to a plus 50 by 130. That would start to see buying. So this is reverse, so I have to be very careful. I wish it was the other way around. Now look at the 120-minute chart. It went to peak A, B, C minus because it failed. And this makes it really important. Look at the technicals. The technicals are right at a level, 3%. And the MACD's not very wide and hasn't gone down all that much. That says you're right at the point where there could be. And I don't want to, I'm not trying to be sanguine. I'm not trying to be Pollyannish. Believe me, the short side, we love the short side because you make money so quickly if you're right. I just am not sure that we fulfilled all the requirements for this move to really start taking out the lows. So let's leave it there. I'll be back tomorrow. Check out my opening call. You'll find it very interesting. And also, we'll watch these levels very close. A Dow minus 40 would be negative. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.